What made headlines in 2023? Catch the real impact of the year's top stories. Watch the 2023 year-end specials only on the Business Standard Morning Show from 22nd to 29th December.
Hello and welcome to the Business Standard Morning Show. I'm Nazia Iqbal. It's the 26th of December 2023 and here are the questions we will be answering today. What's behind the rush to own a flat in Indian metros? Was 2023 the year Bollywood bounced back? Will crude oil hit the $120 a barrel mark in 2024? And what are global capability centers?
Advancing data center performance and energy efficiency to solve your most important business challenges. AMD. Together, we advance.
The domestic housing market in 2023 has seen one of the strongest performances in recent years. The robust growth in the segment is driven by strong demand in the residential market, complemented by supply of new inventories. The year is expected to see a 20% rise in apartment sales in 7 major Indian cities. That's around 2.6 lakh units. But what's behind this rush to own flats and who are the buyers? Shivam Tyagi looks for answers.
Home buyers are lining up for their dream houses. Developers, on the other hand, are busy building apartments tailored to the needs of the buyers. According to a report by JLL India, apartment sales in major Indian metros went up by 21% in the first 9 months of 2023 over the same period last year. The cities Mumbai, Bengaluru, Pune, Delhi NCR, Hyderabad, Chennai and Kolkata saw combined sales of 1,96,227 apartments till September 2023. And it's not just apartments. The overall real estate market is experiencing a boom. A report by India Brand Equity Foundation indicates India's real estate market is expected to grow to $1 trillion by 2030 from $200 billion in 2021. In 2022, apartment sales stood at 215,621 across the 7 metros. Experts contend that this year developers will be able to sell 260,000 flats, which is a 20% increase over the previous year and the highest number of units sold since 2008. For 2024, experts expect apartment sales to increase by 15% over 2023. But what is driving this historic revival in the residential market?
What's been significant about it is that the momentum doesn't seem to have paused at all. In fact, for the last, I would say, a year or year and a half or so, in fact, starting last year, 2022, you had the RBI successively raising repo rates as well. And they went through, a 250 bips rise. And then effectively since February 23, there have been now 5 pauses. But throughout that period, we've not seen, the market momentum kind of have, that it kind of stumbled a little bit or kind of paused a little bit, didn't happen at all. In fact, continues to remain very upbeat. One of the reasons is even at the current level, your interest rates are still lower than what they were, peak levels maybe a decade, 10, 15 years ago. Launches, if I were to say why so much sale is happening is in the last 1.5 years or so, the amount of launches that have come from established or prominent developers in the market, that has been significantly high. And that has also led to, quality supply entering the market, buyers have a lot more confidence going for those projects.
Homeowners are increasingly demanding larger and luxury apartments. Sales are shooting up in the premium segment compared to mid-segment and affordable apartments. Sales grew by 37% year-on-year in the case of premium apartments in the first half of 2023, whereas they increased by just 4% in the mid-segment. Sales in the affordable segment, that is apartments priced below 50 lakh rupees, decreased by 2%. Accordingly, developers are launching more projects in the premium segment. The JLL India report points out that new launches in the premium segment grew by 61%, while mid-segment launches increased by just 7% in the first 6 months of 2023. New launches in affordable segment decreased by 15%.
Our research tells us that in this 9 months period, the number of units that have that were priced above 3 crores and sold in 2023 9-month period is effectively nearly 83% higher than what they were in 2022 sales, right? And the growth also has been the highest in the price bracket, which is greater than 1.5 crores. So again, the push for larger homes, better, more flexible configurations kind of moved, brought about this shift as well. Yes, your mid segment, your affordable segment, from a quantum perspective, they still remain very sizable. But there is a very clear shift in terms of demand for larger homes because the growth in that segment has been the highest.
As luxury apartments are seeing a higher demand, the sales of small and affordable apartments are drastically going down. But why is this happening?
If you look at the last 12 months, especially in the last 6 months, the home loan rates have increased. Although the repo rate remains unchanged, but your home loan rates have been increasing over the last 5 to 6 months. Hence, people who are in the lower middle class category, who are looking at affordable segment, affordable housing, for them, home loans are getting costlier, right? And they don't have. And they are people who are looking at availing at least 85 to 90% of the entire transaction value as loans. So for them, it becomes it's becoming a little difficult to avail home loans because of the rising interest rate, right? So that's one of the key reasons. Secondly, again, so 1 BHKs, so the supply of 1 BHKs are also very less in India. Because developers don't rely a lot on the sales of 1 BHKs, and it doesn't provide a lot of good returns to them. Hence, there are not a lot of options available for buyers.
While financial influencers continue to debate the rent versus buy option on social media, the surge in demand for new homes suggests that people are actively investing in residential properties. Does this sway the rent over buy debate in favor of buying?
It's not a straight answer where, buying versus rent is going to be, completely in the favor of rent. But like I said, there's a rental market as well.
Sure.
But yes, there very clear evidence that the age buying, the buying public's age has come down. And that effectively tells you that people are investing into buying home much earlier. So yes, right. The movement from being a tenant to being a homeowner is kind of becoming shorter.
While there is disparity in growth of luxury homes and affordable apartments, the overall scenario for the residential market remains upbeat. Affordability of home buyers has risen significantly over the past decade, and this seems to be playing out in demand for larger homes.
Advancing data center performance and energy efficiency to solve your most important business challenges. AMD. Together, we advance.
Industry analysts expect residential real estate sales in India to touch 3 lakh units in 2024 on the back of robust demand and quality launches. Meanwhile, the masala in Hindi film industry, which was missing for the past few years, is back in 2023, minting big bucks for multiplexes nationwide. The resurgence of Bollywood movies is evident in this year's box office collection that have surpassed pre-pandemic figures for the first time. What then were the key ingredients that contributed to this spectacular comeback? Shivam Tyagi and Swati Gandhi find out.
The year 2023 ends with the highest ever box office collections by the Indian film industry, marking a record-breaking year in revenue generation. It was also a year of redemption for Bollywood. Analysts point out that the Hindi film industry is one of the last sectors to recover from the impacts of COVID-19 pandemic. Bollywood's stellar performance in 2023 was led by 4 blockbusters, which entered the select 500 crore rupees club. Shah Rukh Khan played a lead in 2 of them, Jawan and Pathaan. The other 2 blockbusters were Sunny Deol's comeback movie Gadar 2 and Ranbir Kapoor's late entrant Animal, which garnered 512 crore rupees in the span of first 3 weeks in December. South Indian films like Leo and Rajnikant's starrer Jailer also made it to the top earners of the year. According to a report by Omax Media, Hindi films raked in 41% of the money in 2023 between January and November. The collection saw an increase of 7% over the same period last year. Bollywood was followed by Telugu, Tamil and Hollywood movies, selling a significant amount of movie tickets.
This is definitely a comeback year for Bollywood in one way or the other, because if I just to give you some context to it, right? So in 2021, the percentage contribution of Bollywood was 19% to the total India gross. The same number currently in 2023 is at 44%. We've also had 3 releases which have managed to cross the 600 crore mark, which is an unprecedented feat, right? We're talking about Jawan, Pathaan and Gadar 2 in this case. Similarly, in 2021, you just had 2 Hindi films in the top 10 gross contribution list, right? The same number for this year will be anywhere between 7 or 8, depending on how Dunki performs. So in kind of all the metrics, you have different directional understanding that, Bollywood has definitely done well.
In calendar year 2022, the Indian box office raked in 10,600 crore rupees, slightly below the pre-pandemic level. However, industry estimates for 2023 suggest overall box office collection to have surpassed the 2019 level, reaching 11,000 crore rupees till early December. The releases of Dunki and Salar in late December are expected to contribute additional 1,100 crore rupees. The cumulative collection for the year is poised to exceed 12,000 crore rupees. So, what drove Bollywood's remarkable comeback?
The very first learning is Bollywood has definitely delivered on ability to provide theatrical experiences which are worth paying for, right? And post-pandemic, we've seen this very important factor that the reason why to watch this film in the theater has become even more important. So for a Jawan or a Pathaan, it would be the spectacle, the action or return of Shah Rukh in an action avatar, right? Or for Gadar, it'll also be about getting the same nostalgia that I got when I saw the first film, right? So it's more like a connect that you have with the franchise, right? So Bollywood's ability to give this theater-worthy experience is something that we've delivered on. Similarly, the second reason I think is Bollywood's ability to create products for which people would want to pay more ticket price for. Just to give you context, the average ticket price for Jawan was 226 rupees. A year back, the national average ticket price was around 187 rupees. So if you're making products which people want to pay more for, then definitely your box office revenue will increase.
Another key theme in Bollywood's revival was collaboration with South Indian stars on and off the screen. For instance, Jawan's producers roped in Tamil filmmaker Atlee while also casting actors like Nayanthara and Vijay Sethupathi. The film then managed to earn 94 crore rupees in the southern territories. Similarly, in Animal, Telugu director Sandeep Reddy Wanga was booked to direct the film. Following this revival, Indian multiplexes saw 2 consecutive years of steady revenue, overcoming the challenges of pandemic-related closures. The merger of PVR and Inox Cinemas to become India's leading film exhibitor, with over 18% screen share, has been instrumental in this recovery. PVR Inox Cinemas turned its bottom line positive in the second quarter of FY24, after consecutive quarters of losses. It also anticipates a strong growth in Q3 FY24 as well, as movie enthusiasts and film exhibitors eagerly wait for 2024. Can Bollywood sustain its dream run?
See, mediocrity doesn't sell now. People have become very smart and they've got options in the form of OTT. So OTT is a very, very formidable opposition which we have to live with now. We can't wish it away. The industry can't wish it away. So because the audience in India is exposed to world cinema, it now has to compete with world cinema. So the writers, filmmakers, they all have to pull up their socks. If they don't pull up their socks, they'll become dinosaurs and they'll be left behind in the race. So I think the biggest learning is that you keep reinventing yourself. You give content which matches international standards now, not just this national. And plus, if you can't compete with them technically, at least give compelling content. See, our Indian audience is very, very undemanding. If you give them great content, they don't mind technical shortcomings. But if there is no great content, then they want at least the film to be made technologically and technically very sound. They want it very sound.
The year 2024 will see some big releases like Hrithik Roshan's Fighter, multi-starrer Kalki, Singham Again and Bhool Bhulaiya 3, which are fueling the hopes for 2024. In 2023, 3 films starring SRK each surpassed the 600 crore rupees mark. Analysts point out that the industry will require additional releases of a similar caliber to replicate such success in 2024 while continuing to deliver cinematic experiences worthy of the big screen.
Advancing data center performance and energy efficiency to solve your most important business challenges. AMD. Together, we advance.
Well, to continue this dream run in 2024, Bollywood's prospects for the coming year depend on how the industry preps its scripts to outpace competition from OTTs and the appeal of world cinemas. Let's now turn to the outlook for oil markets in 2024. Can the geopolitical developments set the oil prices ablaze and take them past the $100 a barrel mark in the year ahead? Or will the slowdown in China keep the oil demand and prices in check? Puneet Wadhwa caught up with Pulkit Agarwal, head of India Content, S&P Global Commodity Insights, on his interpretation of the current developments and how he sees crude oil and gas prices play out in 2024.
Hello and welcome to the show. I'm Puneet Wadhwa and today we have with us Pulkit Agarwal, Head of India Content at S&P Global Commodity Insights. Let me begin by asking you your outlook for crude oil prices for 2024.
See, our outlook for the crude oil for year ahead is the boring same levels as it is now, between 80 to 90. That's what we think crude oil is going to be in the next year. That's down to a slowing demand growth for next year, and also because OPEC Plus has to do a lot of market management, given that the non-OPEC Plus supply is going to increase massively in the next year, which is going to outstrip the demand growth as well.
Can you guys give us some insights as to how the crude oil demand is likely to pan out in the year ahead?
See, as regards crude oil, in 2023 we saw a demand growth of almost 2 million barrels or thereabouts, but in the next year we see the specific oil demand growth that's going to be around 1 million barrels per day. But the supply growth from non-OPEC Plus is going to be a bit higher than that. That is the main worry that OPEC Plus has right now, and that is one of the reasons why so much deliberation is taking place at OPEC Plus in terms of what they want to do with supplies to manage the demand side.
How do you see OPEC Plus respond to the demand side issues?
Yeah, see, in 2024, as I said, OPEC Plus has a bit of a tricky task because the demand growth that is going to happen for next year is also not going to be uniform throughout the year, right? So what we expect is that in the first half of next year there's going to be a surplus supply as compared to demand. Even if even if OPEC Plus decides to continue the current levels of cuts till the mid of next year, even then there's going to be a little bit of surplus. Although as you know, the seasonal demand trends also kicks in, and Q3 is typically a very strong demand quarter. So we would still see some stock draws and some deficit in terms of Q3. But Q1 and Q2 are going to be quite tricky for OPEC, and that is the reason why that at the time when they're entering a lean demand sort of quarters, their cuts are at the absolute maximum. So they need to do something more probably to help support the prices.
What are the 3 to 5 worries for the oil markets going into 2024?
See, due to 2024, a lot of things can play out, frankly. Of course, China demand is one factor we just talked about. But other than that, what OPEC Plus is going to do, because right now OPEC Plus is cutting quite a lot, and if they plan to dial it back, so if they decide to dial that back down, I think that's going to be one major challenge. Other things, of course, geopolitics will always remain a big driver in terms of the oil markets. What will happen there is of course a big worry. In terms of economy, things are looking okay right now. I mean, there's certainly some economic worries in certain part of the world, but overall economic picture looks better in 2024 to some extent as compared to 2023. So that's economy is not that big a worry, right? Another big worry for the energy market, not so much as the oil market, but the gas markets, is the winters of 2023. If the winters are going to be very harsh and strong, we will see some energy deficits in Europe, even though their inventories are quite high. But all depends on winters there. How Europe is going to cope up with no Russian gas, or the kind of Russian gas they're taking right now, without in case there is a harsh winter. I think that's a very interesting equation to look at.
Can gas prices be a joker in the pack for India, even as oil prices remain stable? Gas actually impacts a lot of activities, back home.
See, in India, there are, and by the way, when we talk about gas prices in India, it's a multi-tiered market, right? There's different types of gas that goes on in India. At these levels of crude oil, around $80 a barrel, I think the current prices are, sort of where you would find. Of course, India has a policy of ceiling and floor as well, right? On the largest component of domestic gas. So any increase in prices or any upward pressure in terms of the global energy market is going to be capped, by the hard cap that Indian government has put on the gas prices. That's one thing. For India, in terms of increasing penetration of gas in the domestic economy and all those stated things, I think gas needs to be much more cheaper, frankly, to go deeper into a lot of more industries. Right now, the global energy balances do not seem very bearish in terms of either the gas market or the oil markets. Of course, there's going to be big global supply of LNG coming in 2025, late 2025 to 2026, when we might see some fundamental decline, or rather cooling off of LNG prices. But till then, I think gas prices pretty much are going to be where they are right now.
That's all for now. Thank you for joining us.
He's making plans for an early retirement. Business Standard.
According to the NASSCOM Zinnov report, 18 Global Capability Centers, or GCCs, were set up in India in the first half of 2023. As of June 2023, there are more than 1,500 GCCs in India and more than 1.6 million people work in them. These numbers show India's position as a prime destination for setting up global capability centers. So what are global capability centers? Tariq Ahmed offers a sneak peek.
Consider this. A large multinational wants to streamline its operations and leverage global talent to stay ahead in a rapidly changing business landscape. They answer, establishing an offshore global capability center. Such offshore centers showcase global capabilities with flexibility, centralizes business functions, optimize costs, and eventually enhance productivity. As the world recovered from pandemic lockdowns, Global Capability Centers or GCCs emerged resilient against the challenges faced by their parent organizations regardless of business units or geographic presence. India, which was once the IT outsourcing hub for the Western economies, has now transitioned as a leader in innovation and R&D for multinationals around the world. Not surprisingly, India is an emerging hub in the GCC landscape, central to the multinationals' global business strategies. As of June 2023, there are more than 1,580 GCCs in India. The first half of this year itself, 18 new GCCs were set up in India. BlackBerry, Truecaller, and Lloyds Banking Group are some of the brands that set up GCCs in India this year. The IT sector holds significant importance for global capability centers in India. These centers offer a diverse range of IT services like software development, quality assurance, cybersecurity, and infrastructure management. India boasts a globally acclaimed IT talent pool, and GCCs leverage this expertise to develop and sustain cutting-edge technology solutions for their parent companies. This year, approximately 67% of the new GCCs established in India were from the software and internet vertical, followed by 11% each from banking, financial services and insurance, chemicals and materials, and retail verticals. Data science, data analytics, digital innovation, web applications, platform engineering, automation, and software development are some of the focus areas for both new and existing global capability centers in India. GCCs today deliver product-based innovation using modern tools such as AI and analytics to support revenue growth, better manage risks, and drive efficiencies. In fact, GCCs are now centers for excellence and have progressed from being cost arbitrage centers overseeing support functions to becoming automation and innovation hubs. With all that, they also contribute to the economic development of the regions they operate in.
The nation's trusted bank, SBI, the banker to every Indian.
Well, that's all we have for you today. For more news and analysis, please log on to business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.